Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, 7th day of July 2015, and this is the daily report for gold and silver. Major strong sell-off in the precious metals markets, with gold plunging $16 to $26 lower, currently trading at around 1157. Our stops were hit. I am sad to report that, but it is the case nonetheless at roughly 55. This market has tumbled as we've seen strengthening in the US dollar, a weakening in the euro dollar, and a stock market that had one of the greatest recoveries since April of 2011. On today's show, I do want to combine the gold forecast and trending markets, so gold forecast subscribers can see what we've been doing in trending markets, since we haven't been faring that well in gold, but we have been faring very well in our currency trade. So it will give you the opportunity to see what it is we're doing and see if it may be something that's appropriate for you. So today's dramatic sell-off in the precious metals markets, many of the pundits out there are citing the fact that the real recent downside pressure we've seen has been really influences of outside markets, such as crude oil and the dollar. I believe that that is part of the story, but not the entire story. I think that we've got something interesting brewing in the precious metals pits. But when we take a look at the dollar is strong today, up about 40 points at 96.70. Of course, we are in trending markets long the dollar, short the euro right now. But as you can see, this market has moved up dramatically, roughly almost 0.5% on the day, and it is just below 97 right now, and I believe on track to go back to 100 in terms of the dollar index. Crude oil, on the other hand, had a tremendous turnaround from this morning's trading activity. In fact, it was off about 3% on the day. It was off 7% yesterday, but we had this extreme turnaround. Now, you can really see that. This is a daily chart. Let's go ahead and blow this up. But on our daily chart, you can see that this candle right in here, which represents a day of activity, that's this candle here, you can see the major plunge that it had as this market traded and hit a low of just above $50 per barrel before really steamrolling back up. And as I said, it's currently trading up on the day. Now, we had talked about initiating a short position. We had talked about our current count. And right now, I do believe that we want to stand on the sidelines as far as oil goes. I don't know that it's still going to be a short the way that the market really had that strong reversal, but we'll have to kind of let it play out and see where it wants to go over the next couple of days. But that's certainly a market that we want to look at. We'll continue to look at, but we're going to remain flat in crude oil. So traders, no doubt we have seen a dynamic turnaround in the S&P, trading off by hundreds of points this morning, only to close slightly positive on the day in terms of the Dow Jones Industrial Average. S&P's down dramatically. One thing that we do want to look at, because this is something that is followed by a vast majority of traders, is a long-term 200-day moving average. And when we look at this long-term moving average, it's this large black line right here. What you can see is that we actually moved into this territory yesterday, closed above it, and then moved back into it today. Of course, the fear is that if in fact we see this market break dramatically below this point, we could see a major sell-off, and that's what many people are concerned about. But when we look at the dynamics of what we saw today, look at this one candle, look at the range itself. We have seen a low of 2034, a high of about 2073, and the market is genuinely, or 2078, excuse me, and the market is trading up 10 points on the day. Incredible turnaround in the market. We can say that. We can also say that there is still this really lead, steel, brick wall of resistance up around these highs, and every time we've seen these markets move to these highs, they've kind of sold off. So we haven't had the opportunity really to see it dramatically play out and reestablish some sort of trend after it has hit these highs roughly for the better part of this year, 2015. So traders, just to give you an idea of the kind of range we saw in the Dow Jones Industrial Average today, I've gone ahead and I've pulled up our Dow Jones page, closing up about 93 points on the day. The market has closed and settled 17,777, call it, putting it up, let's say 94 points on the day. Now the low in the market was 17,465, the high 17,793. That is a tremendous 300 plus point range on the trading day, in which we saw the market at some point during the trading day actually be down about 200 points to close positive almost 100 points. A tremendous turnaround. Now, when we look at this is a weekly chart, of course. This large line here is a 30-day moving average, simple moving average that we've put in. And you can see that we are trading below at this point our short-term moving average in the Dow Jones Industrial Average. So traders, lastly, I do want to take a look at the euro. We did go short on the euro, I believe, at 111.50. Roughly at around 111.50. Market's currently trading at about 110.24. It is off about 0.5% today, or about 52 points lower on the day. Our target on this particular trade, and where I believe we could see the euro go to, is roughly the 108 area. That's our initial target. And you might want to consider putting in an OCO order there to get out. The reason that I mentioned that is let's look at some of my short-term studies. Now, traders, realize these are very, very short-term studies. I'm doing them off of 4-hour candle charts, 240-minute candle charts, as you can see right here. The reason that I'm suggesting an OCO might make sense is that we see extreme volatility in the range of the euro. We get these gaps get filled. You can see this one gap here. Market comes down to a low of, let me remove this so I can put my cursor back up, comes to a low of about 109.47. The low here that we hit was 109.16. It comes up, but it will tend to track and then really have a volatile swing in there, so that even though our numbers at 108 could be hit, if in fact they are hit, they could be hit for a very short time just before popping back up. Now, in terms of the cycle that I think that we're in short term, I draw your attention to our current Elliott wave count. Let me go ahead and maybe compress it and rearrange it a little bit. But what we're looking at is a bear count. 1, 2, our long 3, our 4. We've completed 5 out of 5, as you can see here. We could have lower to go on 5. That's what the system is tracking at anyways. But you can also see how it hit this low right here and really popped up off of that. Now, if we have in fact completed this count, because we have 1, 2, 3, 4, 5 out of 5, which should complete the count, we should go into some sort of an ABC progression, which means this is our A here. We'll get a B. This is our counter trend, of course, and then our C. Following that, all things being equal, we'll go back into a 1, 2, 3, 4, and 5 count, and that's where we will see our lower lows right in this area. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the gold forecast and trending markets. Bye-bye.